CNBC-TV18 Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Good morning. Welcome to Bazaar Morning Call. You're joining us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia and joining me is Surabhi and Nigel this morning. Well, folks, it's the penultimate day before the weekend, the Friday coming up tomorrow. But, for the market, I think it's sort of been ho-hum. The Dow had a decent session. It recovered quite a bit, actually, from the lows. So in that context, let's see how our markets shape up. Still, minor bit of red tick is what you saw on the Dow by the end of trade, but there was a good intraday recovery, similar to what we saw in our own markets and the other markets as well as S&P 500 and NASDAQ ending in the green. Now, a couple of things, right? The payroll numbers in the month of February were stronger than expected, and that actually reaffirmed the strength of the economy, and perhaps that will give the Fed a little more leeway to raise rates as per what the dot plot is. Oil has extended its losses, so Brent crude is now below $83 a barrel. This morning flat, but largely it's been under a bit of pressure. It's the rate hike concerns that has caused the sell-off across the board. Powell reiterating his higher for longer stance on rates, however, saying that no decision has been made just yet. Now, the street fear has been for the last couple of days that the Fed may increase rates to as high as 6% in the month of September. But the question we're asking this morning is, are the street fears priced in? Because for the Indian markets, it's been the third day of gains, and now the Nifty is up almost 450 points from the 2nd of March low that we hit, which was around 17,300, 17,320. So that's the big question. We've seen gains for 3 days now. The Nifty has found support at that 17,400 level. So is this a base for the market? 17,300 to 17,400, is it a base? And on the upside, where do we go? The next level I think to watch on the upside would be around 17,800. That's from where the retracement began on the 20th of February. So it's largely in a band, this market, 17,400 to 17,800. There's nothing to suggest that this band may change in the near term. There was large FI buying yesterday, but it was courtesy the Shriram Finance block deal as well, so keep that in mind. DIS selling about 930 crores thereabouts. But largely, you'd have to say the SGX Nifty very, very quiet this morning. The market has been trending higher for the last many days, so looks like you perhaps are wearing the right color this morning. You never know, but the bulls at least are tightening their grip a bit on the market.
Oh, absolutely. There's no taking away from that, Sonia. Yesterday's move was just, in one word, breathtaking resilience. That's all it was, right, compared to the kind of cues that we got in with. Now, I've been asking myself this question for the last 24 hours. What is really priced in? Can you price in everything in one day and move on? I mean, that's what the markets seem to be indicating. Right now, everything is very muddled. All cues. Yeah. The SGX isn't telling you anything. The US close didn't tell you anything. Yields are doing what they are. So at least I'm looking out to the yield markets for most of the cues, at least the immediate cues. And that's where the picture gets really, really interesting. So the question that Sonia asked, is it all in the price? Well, if you're looking at the next Federal Reserve meeting, that's coming up in about 13 days' time. Before we get to that meeting, tomorrow is a huge day because we get the real jobs report number. Remember, it was the January report that really set the cat among the pigeons. We need to see what's happening in February in terms of the overall unemployment picture in the US. Right now, 78% of the Fed funds futures, they're talking about a 50 basis points rate hike. So the question is it done here? So you do a 50 basis points, is it a given? The market's priced in that the Fed will stop somewhere around 5.5 perhaps, and then life gets back to normal course. If you're in that camp, then obviously you want to go out there and buy the dips. The other fact of it is that the yield curve continues to steepen. It is inverted. We are talking about that. The steepening is only increasing. Even yesterday, the two-year yield continued to move above the 5% level, 5.03, 04. The 10-year is still just around that 4% mark, just below 4%. So that's the one question to ask, really, whether the market has priced in the so-called soft recession, hard recession, 75 basis points rate hike or 50 basis points. Is it ready to move on? I think we need to spend a couple more days looking at the US market to get that big answer on the mother market. Back in India, absolutely commendable the manner in which the bulls came roaring back. But look at what the yield market in India is also doing. Yesterday, we had a bit of a mini inversion even in India. Now, no one's screaming away saying that this is any sort of a recession indicator in this country. That's not how it works here. But it's interesting to note what's happening. This tightness in the money markets, even here in India. There was an auction of the 364 Treasury bill yesterday, and that's where the yield on that bill, which is short term, went above the long term, the 10-year bond yield, which was closer to around 7.47%, the 2032 paper. So the indicators here in India are that the money markets are a little tight. But I think in terms of the larger picture on the US, Nigel, at least I'll want to, still hold out, look at that jobs data, and then see. The market right now is telling you, hey, let's move on. It's okay. We know this whole interest rate talk. But is it really that simple? I'd want to wait till, post-work Friday.
Well, that's right. And the Nifty yesterday did very, very well. What an outperformance we saw,
yes.
right? And the Nifty Bank was the one that led the charge yesterday. And clearly, we ended at the high point of the day because the Nifty Bank did a relative outperformance. Today, the IT index that yesterday didn't participate, it had an off day. Well, that could bounce back because the Nasdaq was a relative outperformer. Weekly expiry is what plays out today. And on the Nifty itself, positioning is such that the data suggests that maybe, in fact, the bears believe that 50 DMA is going to get protected on the Nifty. Can the bulls bring a surprise? If they have to do that, then the Nifty Bank has to play an encore. It has to do an encore today. Because the 50 DMA is around 100 points away from current levels, and the 100 DMA is close to around 350 points away from current levels on the Nifty Bank. So the Nifty Bank will give direction today to the markets, and the IT index will support as well. Moving to the F&OQs, yesterday, one notable factor, particularly towards the end of trade, was the premium on the Nifty, which was 70, 80 points earlier. It came down to around 65. Yesterday, it came down to around 40 points odd. So clearly, there was some shorting at higher levels. And it was the FIs who were adding shorts. Yesterday, they added close to 6,000 short contracts. Takes the short positioning to around 75% odd. On the option side, they bought more calls than puts. But in an uptrending market, you want to see more puts written than calls. And that's what happened yesterday. Close to around 5 puts were written for every 1 call. Let's run you through the options data then. The 17,600 put, well, that was getting written very aggressively, but that's a little far-fetched for now. At least for today, you're counting on the 17,600 level, definitely holding out. But the two strikes that did see a fair bit of addition were 17,700 put and 17,650 put odd. On the upside, though, on the call side that has the highest open interest is a 17,800 call. It has more than 1 crore shares out there. So that's what I said about the positioning. The call writers, they believe that those higher levels are going to get defended, which brings us straight to the levels then. On the upside, 50 DMA comes in at around 17,850. But since there is writing at around the 17,800 call, you're expecting that 17,830 odd level to hold out. So that's a bit of a resistance zone on the upside. On the downside, though, the positioning is such that maybe the 20 DMA does hold out, which is a good 60 points away from where we closed yesterday. So we'll have to keep an eye on that. SGX Nifty suggesting a flattish start. Can the Nifty Bank do an encore? That's the big question. If it can, then we'll have a good session. Otherwise, positioning is such that we don't get past that 17,830 odd mark.
Okay, we have covered quite a bit of ground, right? In the last many days, it's over a 400-point rally that we've seen in the Nifty from the 2nd of March. So let's see how things go. I think the big question that everyone's asking now is the worst of the rate hike fears priced into the market already. Time will tell, but for now, let's tell you what's lined up in the next 2.5 hours. In the first half hour of the show, here's what you'll get to see. You'll get updates from the markets across the globe. And Ayaz Motiwala of QRC Investment Advisors, Nivalis Partners, will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis. Amisha Vora of Prabhudas Leeladhar will be joining in. All right, first up on the equities front, we have a comment coming in. Rhythm Desai of Morgan Stanley with his view. He says rising short rates, rich absolute valuations, worsening global liquidity and offsetting institutional flows have probably capped stock indices. And there is, of course, they're overweight on discretionary, industrials and finance, and they're underweight all the other sectors.
Okay, so let's move on to another call coming in. This is from CLSA and it's a long-term macro call. Indranil Sen Gupta says that they add a second 25 basis points RBI hike on the 8th of June, atop the April 6th one, with their economists now expecting the Fed to raise rates by 100 basis points to 5.75% by the 26th of July. He says after the Fed pauses, RBI MPC should cut 125 basis points from Feb 2024, with inflation easing to 5.5% in FY24 from 6.2% in February 2023. He says this backs their call of the 10-year selling off to 7.75% by June and then falling to 7% on RBI OMO rate cuts by March 2024. With the Fed raising further, he sees the rupee ending FY23 at around 81 to the dollar from 80.50 earlier. They retain their 79 to the dollar March 2024 forecast. Guys, you know what this tells me? A lot of commentary is like driving. Nigel, you and I drive. Sonia, you do too, right? It's like 100, 50, 50, 70, 70, 20, 20, 120. That's what it feels like
and
to
then
me.
crash.
Hopefully not.
Hopefully not. Okay, but let's get you some money market views as well this morning. First up, coming in on the currency front, Parul Mittal Sinha of Standard Chartered says the dollar INR has slipped below the 82 to the dollar threshold last week on equity FPI inflows, while central bank intervention limits the downside, with sharp resurgence in the dollar driving the dollar INR pair higher again. She expects the rupee to trade in a range of 81.75 to 82.50 next week. The focus remains on the positive March seasonality effects and the dollar moves, with the US data to be watched for further cues.
On the bonds, Parul Mittal Sinha says domestic yields continue to rise for the second consecutive week, tracking a spike in global yields on repricing of US rate hike expectations on strong data and hawkish Fed speakers. She expects the benchmark 10-year yield in India to trade in a range of 7.4 to 7.5% next week. Parul also highlights key data to be watched, which includes the US non-farm payrolls number, which is due tomorrow, and consensus estimates is of 224,000. India's CPI data is due on the 13th and is expected to come in at 6.4%, and the US CPI on the 14th, with consensus estimates pegged at around 6%.
Well, we have a lot of stock-specific action for you, and we'll get to that in just a bit in our special Top 10 segment. But the stocks that we're tracking today for you are Shriram Finance, Kirloskar Royal Engines, Bharat Forge, Sequent Scientific, Ramkrishna Forgings, Shopper Stop. Their stocks on the back of positive news flow, while on the flip side, you have Adani Transmission, Adani Green, Data Patterns, and Gokul Das. They're stocks that could react to negative news flow.
All right, lots coming up in the next 1 hour, but let's